Welcome back to the Wall Street Podcast. Today we're doing a deep dive into the latest from the Wall Street Journal, specifically their excerpts from August 26, 2025. Our goal here is to really unpack the key market moves, corporate plays, and policy shifts impacting the U.S. financial scene. Give you that focused overview.
Absolutely. And what jumps out from these sources is, well, an economy facing several different pressures at once, we're seeing some fundamental shifts happening.
Right, beyond just the daily noise.
Exactly.
Okay, let's start with the economic indicators. We've seen markets pull back a bit recently.
The Dow down 0.8%, S&P 0.4%, NASDAQ 0.2% off their highs.
So a fairly broad retreat suggests maybe a wider reevaluation by the market.
It seems that way. And it's not just equities. Look at housing new home sales slowed in July. Pretty significant.
High mortgage rates finally biting.
Seems likely, yes. Dampening demand, and manufacturing is also softening. The Dallas Fed Index for Texas factory activity actually dipped into negative territory in August, minus 1.8.
Okay, negative means contraction. That's a notable shift.
It is. And all this softening kind of hints at where monetary policy might go.
You mean the Fed?
Right. The Chicago Fed's National Activity Index also edged down slightly to minus 0.19, below average growth, essentially.
So markets are thinking rate cuts?
Increasingly, yes. There's a growing expectation, pricing in a potential Fed rate cut maybe soon as September.
Interesting. And while the Fed watches jobs, there's another big structural thing happening, immigration.
A huge one. U.S. net immigration projected to drop sharply to negative 205,000 this year.
Negative, that's quite a swing.
It's dramatic. And the long-term implications for economic growth, labor supply, even public finances, they're significant. Limits potential.
Okay, let's shift gears to corporate maneuvers. Some interesting plays here. Dillard's.
Yeah, buying Longview Mall for $34 million.
Which is kind of counter-trend, right? Aren't retailers usually shedding property?
Generally, yes.
Yeah.
So this suggests a very specific, maybe targeted asset strategy on their part.
And an M&A? Big coffee deal.
That's Keurig Dr. Pepper acquiring Peet's owner, JDE Peet's. An $18 billion deal. Plus, plans to spin off a coffee brand. Big consolidation move.
In Boeing, still closing deals?
A large one. $36.2 billion sale, 103 planes to Korean Airlines. Shows continued demand there.
Let's talk automation. Hyundai's new Georgia plant.
Oh, that's fascinating. A 2-to-1 robot-to-human ratio.
2 robots for every person.
That's right. Humans are focused on the intricate stuff like quality control. Robots handle the more repetitive manufacturing tasks. It's redefining labor.
And in the digital space, AI continues to dominate headlines.
Well, Perplexity announced a revenue pool, $42.5 million, to compensate news publishers.
For using their content in its AI search engine.
Exactly. An early attempt to tackle that whole IP issue in AI. Still very contentious.
And Thoma Bravo buying Verint.
Right. $2 billion for the call center software company. More AI integration into customer service.
Okay, now for policy and regulation. This feels particularly active right now, starting with the Fed itself.
Yes. President Trump moving to remove Fed Governor Lisa Cook, citing some serious allegations about mortgage applications.
That's highly unusual. So let's tackle our first question here. What are the immediate and long-term implications of trying to oust a Fed governor like this?
Well, it's pretty much unprecedented. It directly challenges the whole idea of Fed independence, which is, crucial for market stability.
A cornerstone.
Exactly. If this move succeeds, it could set a really powerful precedent for executive meddling in monetary policy. It might shift the board's balance decisively towards presidential appointees.
Which could impact interest rates, market confidence.
Globally, potentially. It really tests the legal framework.
Okay, sticking with government intervention, but shifting slightly. The government's stake in Intel.
Right, taking nearly 10% equity by converting $8.9 billion in grants.
So, second question, how does this Intel stake reflect a broader shift in industrial policy, and what are the consequences?
It's definitely unconventional. Blurs the lines between government and private enterprise. Some are calling it deal-based capitalism.
A way to secure tech leadership.
That seems to be the idea. But it also raises big questions about market distortion, maybe picking winners and losers. It's a significant gamble on national strategy.
High stakes indeed. Now, trade policy. Also back in the spotlight.
Yes, threats of new tariffs on furniture imports. We saw stocks like RH and Wayfair dip on that news.
And targeting digital taxes abroad.
putting countries taxing U.S. tech firms on notice. Potential tariffs or export restrictions there, too.
Which brings us to our third question. With these furniture tariffs and the digital tax probe, how might these trade policies impact consumers and companies?
Well, the furniture tariffs likely mean higher prices for imported goods for you, the consumer. It could also push companies to, rethink their supply chains, maybe move production.
More domestic production pressure?
Possibly. And the digital tax threat really targets those global tech giants. It impacts international trade talks and could change how they operate or price their services.
And quickly on AI regulation, a lot of money flowing.
Over $100 million from pro-AI PACs pushing back against strict rules. Meanwhile, you have lawsuits like XAI suing Apple and OpenAI over alleged anti-competitive practices. It's a real battle shaping up.
And finally, financial access, an executive order.
To investigate banks possibly denying services based on politics, which interestingly has fueled some interest in crypto as an alternative, politically neutral, perhaps financial rail.
Okay, so let's bring this down to the impact on the general public, on you listening. What does all this mean?
For everyday finances, well, as we said, potential higher prices on things like imported furniture. Also, those immigration shifts could affect labor availability in certain sectors, impacting costs of services or goods down the line.
And digitally.
The whole AI and content compensation debate, that's going to shape how you get your news and information online. It could affect availability, quality.
And the bigger picture, economic stability.
These shifts in Fed policy, government stepping into industries like semiconductors, they can influence everything from your mortgage rate to job growth, the overall economic climate you live in.
So it's a really dynamic period, lots of interplay between economic forces, how companies adapt, and these evolving government policies.
Definitely. Staying aware of these shifts is going to be crucial for navigating what's ahead.
So perhaps the key thought to leave you with is this. How will these interventions, these new corporate strategies, ultimately redraw the line between market forces and government direction?
And crucially, what ripple effects, what second-order consequences might we not be seeing yet?
Something to consider. That's all for this deep dive. We'll be back soon with more insights.